Before we jump into the content, just once again, this webinar is about the Global SportsTech VC Report. That's the only thing we're going to discuss today. We're going to walk you through the slides. So this is, let's put it this way, a different way of consuming the report. You can sit at home, you can just read everything, or as you're doing right now, you're tuning in and you're listening to what we have to say about the numbers in the report. Just an offering from us to you guys. Now it's definitely time to have a look at the numbers. Enjoy.
Fantastic. Thanks, Ben. And I'm going to dive right in. But to kick things off, so what are we going to talk about in this section? We've divided the report, or this is the webinar, in the three parts that the report speaks in. So first, setting the overall context of what has been happening in the world of sports tech over the last 4 or 5 years, or actually 5 to 6 years. And then diving into the geography. So that's what I'm going to do in this section. But before I do that, I'm going to ask you a quick question, which is that how do you think 2020 went? I mean, it was a crazy year in terms of investment in sports tech. Do you think that the figure of amount invested in sports tech, was it more than 2019, less, or was it the same? Keen-eyed observers of our sports tech X content before, or who have been following us, will probably know the answer. But yeah, that's a really important topic for us to talk about. We're going to get into that. That said, all right, let's take a look at the answer. Well, 18%, well, 70% of you said more, 23% say yes, and 8% the same. Tricky one. The answer is actually a trick question, because if you count, well, first of all, 2020 is not finished yet, but actually, yeah, it is more. In fact, till September end, which is the period that we considered for this analysis, you can already see there was, till September, it was almost matching the entire figure for 2019. And in fact, if we count October, it is already fired up, because we've seen a flurry of deals in October and in the first week of November. So yeah, everybody who voted more, you're absolutely spot on. And we only see that increasing. And the interesting thing about that is that this keeps in with the trend that we've seen in the sports tech industry. As you can see, this graph, all the even number years have seen big spikes, while the odd number years have seen lows. So it's almost been like the investors have made big bets, and then we wait and watch and consolidate, and we go again and wait and watch again. This has been happening in alternate years. Now, we felt that 2020 might continue this trend, but then there was this little pandemic that broke out. Well, with all respect to, I hope everybody is safe, or if you've known somebody who's gone through it, that they've come out of it well. But yeah, it affected things. But in spite of all of that, 2020 has still been a super strong year. So that's a fantastic sign for sports tech. We saw it. We've seen sports is almost like a recession-proof industry, and we hope that that continues. The other thing that I will point out on this chart is look at the line below, the average ticket size, and you see that growing. Again, in the even number years, that number is pretty significant. 8 million in 2016, over 9 million in 2018, and over 11 million in 2020 is the average ticket size of the deals that are cut. An indicator, because the total number of deals is low, the figure is slightly inflated, I will admit, because obviously it takes a while for all the news to come to us. So we report on all the big deals that could come in, the lower deals, or the lower value deals, which are bottom of the pyramid. They take a bit of time to come in, but it's still a really high figure. In terms of what has been driving this investment, 2016 was content. We saw BAMTech, we saw Les Sports do big rounds. 2018 was fitness. We saw the likes of GeoFit, Peloton, ClassPass. They all had big rounds. And in 2020 has been more of the same. But we'll get to that in a second. The more important thing for me to also talk about here is where has this investment happened? And to set the context over here, yeah, of course, North America is far and away the leader, right? I mean, the US itself accounts for, I think, over 95, I think it's 97% of the funding in North America, but Canada is a decent contributor as well. The important thing to note is that Asia is a big market. Asia is way below Europe when it comes to the number of deals. You can see Europe has about 1,200 deals over the period that we considered, but with Asia, that number is less than 500. But look at the difference in value. the billions that are invested in Asia versus the billions invested in Europe, that is a big shift. It's the Asian investors, and specifically Chinese and Indian startups, because the investors are coming from everywhere. It's US and Chinese primarily. The startups are in China and India, big consumer-driven markets. So that's where the big bets are happening. Another indicator of that is, again, I'll ask you, draw your attention to the average ticket size. In the US, it's 7 million. In Asia, it's nearly 20 million is the average ticket that's written. Big numbers, no? Europe, we see a lot of stuff at the bottom of the pyramid. Lots of accelerators, lots of great programs support the ecosystem, but the big ticket sizes are harder to come by. And this distribution also is reflected in if I break it up by year, we saw initially North America in say 15, 16, 17 contribute in a big way. 2018, sorry, there's a little typo in that figure for North America. It's 46%, not 72. But you can see the contribution of the US is diminishing in 18 and 19, but the US came back in 2020. And actually, the interesting thing in 2020 was that we saw very little activity in Chinese companies. It's almost like those investors were a bit more circumspect for whatever reason about how much, where their dollars were going. But we saw a lot of activity in US and in India, which is in fact what we'll look at here. I'm going to draw your attention first to the top 5 countries in 2020. You can see the US far and away ahead. India was where the second most amount of money was invested in sports tech, on the back of 2 industries, again, fitness, and the other one was fantasy sports. India is a really interesting market for fantasy sports. It's almost like we've talked about it before. It's like Fantasy Wars 2.0 after the DraftKings, FanDuel fantasy off, if you want to call it that, in 2015 and 16. We're seeing similar action now in India with cricket. So in the month of September, just before the IPL went live, we saw big deals for Dream 11 and Mobile Premier League. And just to give you a context in terms of why cricket fantasy is so big, the IPL, the opening night of the IPL, drew the highest amount of viewership for any opening night of any sport in any country, for any opening night of any league in any country. Yeah, so the NFL, the NBA, the Premier League, the opening night viewership in the IPL was the highest. I think it was about 200 million. So that gives you an idea of the scale that we're talking about when it comes to cricket fantasy. So that's what happened in 2020. China came in third. That was primarily on fitness investments in Keep and Pitcher. But you look at the overall figure, I'll draw your attention to number 1, which is the US at 10 billion nearing. Let that sink in. And why that's important to sink in is because number 2, you see China at 5 billion. That's half the investment that you see in the US. And look at the gap to number 3 again. India is at about 100 million, which is 20% of China. So the gap between the top 3 is large. Gap between India to the UK, which is in 4th, is also fairly large, about $1 billion in India to 600 million in the UK. So the top 3 kind of consolidated their spaces in the top 10. And then we come into Europe, the UK, France, Germany. Brazil is in that spot primarily on the back of one big deal, Gym Pass, which happened last year, 300 million there. So one deal props up the entire sports tech ecosystem, but we expect Europe to overtake those. But I just want to highlight the difference in how spread out this funding is. And that brings me to the cities, because here is when you'll see that more deeply illustrated. I'll first talk about what happened only in 2020. As I mentioned, the Chinese investors were quiet. We saw China 3rd in the list of 2020, but again, a fair way below India, nearly 1/3 of India's value. And in the top 5, you don't see any Chinese cities, as opposed to in the overall chart, you see 3 Chinese cities in the top 5. I think that's a fair indicator that China didn't see too much investment in this year. I'll also highlight that within the top 15, as Ben makes a reappearance, so welcome Ben, I'm sure you have some questions for me. But in the top 15, we've got 7 American cities, and we've got 4 Chinese cities in the top 7 itself. So China has really high representation in the top end of the list, while US is spread throughout. Again, indicator that China is willing to write big checks, while in the US it's more evenly spread out. Bangalore and Mumbai come in at 9th and 10th over, 9th and 11th overall to show the Asian, deepen the Asian flavor. London, which is the top European city, at 10th place. Worth pointing out for London, though, is that London sees the second highest number of deals in a year, in this period, at 248, after New York, which is at 270. So if I look just at number of deals taking place, London is second, but when you compare it to volume, it's no contest. Empire State of Mind reigns supreme.